Hi traders, it's Roberto, and this is the Pro Traders Workshop continuation education, and today is the strategy on a 30-minute chart using a 5 and 20 crossover. I know some of you are using a 21, and it doesn't really matter if you use 21 or 20 moving average line. The difference is uh, insignificant. So 5 and 20 crossover with a MACD confirmation strategy. So um, probably the best times I've been able to find these trade setups is on Monday retracement and turnaround Tuesday. And how to qualify a trade is really straightforward and easy. All you need to do is wait for the two lines on MACD to cross to the upside, in this case, to the upside, and the two lines, the 5 and 20, crossing over either at the same time, or sometimes you'll see the MACD lines already cross and then you see the crossover. This is done on a 30-minute chart. You can do it on a smaller time frame, but there's so much noise that you may exit a trade because on a 15-minute chart, oftentimes you'll see these two lines cross down again and up again. So use this on a 30-minute chart or on a 1-hour chart. For a 30-minute chart for earlier entry. And again, you need a crossover on MACD. Two lines of MACD need to cross over to the upside, and the two lines of 5 and 20 cross, and there's your trade. Technically, you don't get out of this trade until the two lines cross again the other direction. This is an 85 pip move. I, on the other hand, like to use price action for exits. So if I see a candlestick pattern, for example here, indecision candles, I probably would have exited the trade up here, which is about the same as I waited till crossover, but that's not going to happen all the time. Here's another trade setup, a crossover on Monday. Here's Monday's retracement. So you wait on the 30-minute chart, crossover is there. The two lines of MACD have already crossed, and there's your trade. Going into Tuesday, here's turnaround. This did not occur until the European session. So there's the crossover, and you see this bow tie effect that you see. That's what you want to look for. If the two lines are braided, then it's not a good setup. But if the two lines were angled and separated prior to the turnaround, then you see the crossover, then that's a good, healthy setup right there. So there's the trade, and I would exit it after I saw this bearish engulfing candle for about 80 pips. Now, we do see the two lines of MACD have crossed to the downside, but it has yet to cross to the downside on the 5 and 20. Let's look at some other setups. Here was the Friday, the Monday retracement, turnaround Tuesday. And again, the two lines of MACD crossing to the upside. Okay, let's go to a 30-minute chart. This is a 1-hour chart. So you can use a 30 or 1-hour chart. I prefer using a 30-minute chart simply for an earlier entry. You can get in half hour earlier, actually. So there's the crossover of MACD, the two lines of 5 and 20 crossing to the upside, and there's your trade. And technically, again, you stay in this trade as long as price stays above these two lines are angled and separated, and price pretty much stays above these lines. You can stay in this trade. But now we have an inside bar, which is technically a reversal candle, and the market's already put in 182 pips. So the pound dollar has done its daily range. So this would probably I would exit out of this trade, and I took this trade and exited up these levels around 11 o'clock Eastern. There were a few more trades. I haven't gone over the Monday retracement, and I thought I'd go over it now. I was going to do a separate video, but using the 520 crossover with MACD confirmation is really what I wanted to go over when doing a Monday retracement. And that's what I normally do, is wait on a 30-minute chart when the two lines have crossed over on Monday to take the trade. And pretty much you could have stayed into this trade. This is a 70 pip retracement in Aussie dollar on Monday. Here's Friday's rally, the two lines crossing over, and then here's Monday retracement. And usually I would enter a trade at the opening of the Australian market, and now what I'm starting to do is waiting for, because this was quite a retracement before it turned around and went up 32 pips before it turned around and we had that Monday retracement. So better part of Asian session coming into the European session, the market was in an uptrend and then turned around and gave us that Monday retracement. And the same thing here. We're waiting for the news event, and news event came out and did not affect the turnaround Tuesday, because turnaround Tuesday happened anyway. Even though the news was negative for the Australian dollar, look what happened. Just turned around and went north again. Okay. I caution you doing this strategy, the Monday retracement, on exotic pairs. They don't work as well. This was Friday. Here's Monday's retracement. Friday sold off. Here's Monday's retracement and turnaround Tuesday. This one worked out nicely, but you just have to be cautious. They work really well on pound dollar, euro dollar, New Zealand dollar, Aussie dollar, and the yen crosses. You see if we can find the euro yen. I think was a good trade setup. And not much of a retracement. And here's Monday's sell-off, and here's Monday's retracement. And this is a good sign. When you see a Monday retracement that's not exaggerated or went up 70 pips, which is not bad, but Friday did 311 pips, and you would think it would give back 150 pips. But when you see that Monday is not really doing anything, that there is a retracement but not much, that gives you a clue that most likely it's going to continue on Tuesday going south, and it did. Okay, so whenever you see a Friday sell-off or a Friday rally, but Monday is not much of a retracement, that usually indicates that the market's going to resume its trend on Tuesday. And it did. This is the turnaround Tuesday, and the market put in over 180 pips. Okay, again, here's Friday sell-off on euro yen. The retracement was only about 84 pips. Still a retracement. It's still a Monday retracement, but did not give us the 50 or 61% retracement level that I would expect on a Monday retracement. But when you see a retracement that is not, I think this only went up, I don't even think it went up to 23% retracement level. Let me see. Yeah, it went up to 23%, and that was it. So when it's a small retracement, then most likely it's going to continue on Tuesday to the downside. And of course, you can use your the strategy using the 520 strategy. Just take the two-line moving averages, the 5 and 20 crossover, and the two lines of MACD crossover. Okay. So if you're not sure of an entry, you can use the 5 and 20 for your entries. So here's Friday sell-off, Monday retracement, not much of a retracement, which most likely indicates the markets will resume its trend on Tuesday, and it did. And you see that nice sell-off right there. Here again is another trade set up on Aussie yen. Here's Friday sell-off, and not much of a retracement on Monday. See the retracement very minimal, and that usually tells us this sell-off from the previous week will continue, and it did. And here's Tuesday, turnaround Tuesday. So rally on Monday, not much, probably around 23, 38% retracement level. And then notice that the two lines immediately on Monday turned around and headed south, and it just continued to go off through Tuesday. Okay, I've been asked to review gold many times, so I thought I'd take opportunity and do it now. And again, you can use this as strategy on gold as well. I don't think I've used Monday retracement on gold. I'm sure it does work, but here was Friday's rally. And there's the Monday retracement. Again, minimal retracement, which usually indicates that Tuesday was going to be a strong move to the upside, and there it was. Use your crossover, 5 and 20 crossover. Make sure MACD lines down here cross to the upside. On a 30-minute chart, there's your trade right there, and it rallied. Okay, so that's it for this tutorial. If you have any questions just on the strategy, just email me. And Friday's retracement is very consistent strategy that we use, and just make sure you stay away from those exotic pairs, pound New Zealand, pound Aussie. If you do trade those, make sure you follow the strategy, the crossover on MACD, crossover on 5 and 20 coming into Monday, and then again on Tuesday. Have a good trading week. Thanks for watching, guys.